Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are looking at a few electric vehicle stocks that could literally 10x your money right now. So we are going to focus on two major electric vehicle stocks, being ChargePoint and Quantumscape. However, I will have other bonus electric vehicle and EV stocks spread throughout this video. So both of these companies potentially can 10x, so we're going to be going over why analysts and professionals think that these companies could literally 10x. So we're going to start with ChargePoint, and then we're going to work our way through a few bonus EV stocks, and then we're going to end with Quantumscape. So for more electric vehicle stock news videos, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about ChargePoint and Quantumscape, and without further ado, let's jump right into today's stories. So to start off, ChargePoint is one of the leading and market leaders in terms of electric vehicle charging infrastructure in the United States and over in Europe. The stock has recently fallen around 67% from its highs, despite bringing in very positive results for the fiscal year of 2022 and very positive projections for the fiscal year of 2023. Right now, ChargePoint trades for around $20 per share, while the low-end 12-month analyst price target is $15. The average price consensus among professionals is $26, while the high-end bullish price prediction is $46 for the next 12 months. Currently, 18 analysts cover this company, with 12 of these analysts saying that ChargePoint is a fantastic buying opportunity right now, while 6 of these analysts say to hold the stock, while none of these analysts either say that the stock is going to underperform the overall market or that we should sell the CHPT stock. And the reason why ChargePoint is on this list is because right now the company is worth around $5 billion. However, analysts believe that this company could reach a market cap of around $50 billion. However, with that being said, I do want to say that electric vehicle companies and electric vehicle stocks are very risky. They are high risk, high reward. So this could also result in catastrophic losses for some investors if you are not careful when you decide to invest into these particular EV companies. This is why it's imperative that you always do your own research to make sure that these companies are aligned with your investing goals and that you're not taking on too much risk. But with that being said, let's talk more about ChargePoint. So ChargePoint makes money by selling their hardware to various businesses, fleets, and even residential customers, and this generates revenue for the overall company. Businesses install ChargePoint ports at their various locations for either their employees or even to attract customers who own electric vehicles. ChargePoint stations can also be found in front of apartment complexes and condos. Also, homeowners have some of their ports located in their garage. ChargePoint also estimates that their market penetration will grow along with electric vehicle adoption overall. So this is very good news in general, considering that ChargePoint is already a market leader. The ChargePoint CEO even had to say this regarding their overall market opportunity, and he says, "I tell folks here all the time, we are plus or minus at 1% penetration, depending on whether you're talking about North America or Europe, into the fleet of vehicles out there. Less so for fleets. For consumer passenger cars, plus or minus 1% or so. So a company like this can turn in these results at that level. For how early we are in penetration, we have enormous, absolutely enormous expectations for what this looks like in just a very few years." So basically what he's saying is they are already a market leader, they have decent market penetration, and the market penetration is set to increase as time goes on very rapidly. This is why ChargePoint can already post revenues of around $242 million for the fiscal year of 2022, and this actually beat their revenue estimates, which dictated that they were supposed to come in at around $235 million to $240 million worth of revenue, and this is also a substantial increase from the revenues they brought in from the fiscal year of 2021, which was $146.5 million. They also have fantastic projections and forecasts for the fiscal year of 2023, where it's guided that the company is going to bring in anywhere between $450 million to $500 million worth of revenue. As you can see from their stock chart, initially the company absolutely surged, but recently, due to a plethora of factors, including that this stock is just cooling off right now, the stock price has plummeted very, very low. Right now, like we said earlier, the stock is trading at around $20 per share. However, I would say getting into this company anywhere between $15 and lower is going to be ideal. However, buying at $20 could be advantageous for investors that want to hold of this company long term, which I will elaborate more on later in this video. ChargePoint is aggressively pursuing customers specifically in Europe and North America, and ChargePoint is growing its commercial business by around 89% in fiscal year of 2022. And this is thanks to over 50% of the Fortune 500 companies are now ChargePoint customers, which is fantastic. So clearly, these Fortune 500 companies are not going to do business with another company that is not very good. So clearly, it goes to show that ChargePoint is literally the market leader in this particular space. And over time, ChargePoint actually anticipates and projects that their operating costs will decrease, while at the same time their margins are going to increase. This means that in calendar year of 2024, also known as fiscal year of 2025, ChargePoint actually says that they are anticipated to break even and profitability will ensue in the future from that point onwards. So this is very, very positive. Long-term investors may consider adding ChargePoint to a very well-diversified basket of various electric vehicle stocks. So there's no sense putting all of your money into one particular charging stock. There is a plethora of other good charging stocks that I will even mention in this video for you all to go and do your own research on. Also, I want to point out that ChargePoint actually has a partnership with Goldman Sachs. So the company partnered with Goldman Sachs to tailor their financing solutions around ChargePoint services so they can provide financing solutions for their EV customers, which is more good news. ChargePoint is literally the largest electric vehicle charging network in the world right now because they have over 174,000 charging ports across the world right now in 14 countries in 15,000 different locations, giving it around a 65% market share, making it the number one in US by a very large margin. Also, their client base is very impressive. They have over 5,000 commercial and fleet customers, which is very, very good news. So the question is, should we buy this company now and wait 5 to 10 years for this company literally to 10x? Well, honestly, it's up to you and how you compare ChargePoint versus other electric vehicle charging companies such as EVgo, which operates a fast charging network in the United States. Another competitor would be Volta, which is another very well-known charging business. So before you just go in and invest into ChargePoint, it would be in your best interest to also research other companies such as Volta as well as EVgo before investing into ChargePoint. However, I personally think all of these companies are pretty good, but clearly ChargePoint is a market leader in charging stations in general. However, fast charging stations should also be looked at, and because we are talking about how these companies charge electric vehicle batteries for electric vehicles, we should honestly look at the battery technology themselves, which brings us to Quantumscape, which is another electric vehicle stock that can literally 10x according to analysts. And Quantumscape has a ticker symbol of QS, just like ChargePoint has a ticker symbol of CHPT. So Quantumscape right now also trades for around $20 per share, while the low-end analyst price target is $18, the average price consensus is $23, and the high-end price prediction is $30 for the next 12 months. 8 analysts currently cover Quantumscape stock, while one of them says to buy it and 7 of them say to hold, while none of them say that the company is going to underperform or that we should sell this stock. There are multiple rumors going around between Quantumscape and Porsche, which means that Porsche could potentially integrate Quantumscape's solid-state batteries into their new vehicles. So let's actually see if this is plausible. The main competitive advantage for Quantumscape is clearly their battery technology, because their batteries will allow electric vehicles to literally last for thousands of miles without needing to be recharged. According to this author, reports broke out recently that the German luxury auto brand, which is Porsche, may in fact integrate Quantumscape's batteries into their electric vehicles. However, like I said earlier, nothing is set in stone for this as of yet. It is still technically speculation until we get a statement from Porsche themselves. So this is game-changing technology for Quantumscape, which actually increased their stock price and caused it to surge by around 32%. But let's actually talk about the technology that these batteries offer. So the author of this particular article says that by 2030, every single electronic device that is currently powered by lithium-ion batteries today, which is what the majority of batteries are made of right now, which would be the batteries in your phone, your laptop, smartwatch, electric cars, will be powered by a solid-state battery that is being pioneered almost by Quantumscape. However, the first problem with this is that solid-state batteries are extremely expensive to make, so that is going to clearly clearly lower the margins for Quantumscape overall. However, if Quantumscape can make these batteries cheaply, this company could definitely 10x in the future. However, right now, it's still entirely speculation. I also want to add that this technology is possible, but it's still speculative, and here's what I mean. The company has had very good trials in small versions of their solid-state batteries. However, the company will still have to continue to improve and scale that to a larger battery so it can be large enough and powerful enough to actually have an electric vehicle ran off of it. But if they can achieve this and they can actually make their electric battery power an electric vehicle for thousands of miles, Quantumscape would not only be the #1 battery producer for all electric vehicles, because who wouldn't want this technology in their electric vehicles, but they would also be the #1 battery producer for smartphone makers, energy storage solution providers, laptop makers, and a plethora of other electronic device makers. Now, I do want to go more in depth into Quantumscape because right now they have 4 main key customers. 3 of these customers are in the automotive industry, and 1 of them is in the stationary energy storage product manufacturing industry. 1 of these 3 automotive companies are actually in the top 10 global auto manufacturers in the world by revenue. However, Quantumscape has not disclosed the names of at least 2 of these companies. This is why people are speculating that one of these could possibly be Porsche. So the question is not whether is this company going to be something in the future. Rather, the question is, can Quantumscape develop a battery that's large enough and powerful enough to actually run an electric vehicle? Because if so, this stock and company could be worth hundreds of billions of dollars in total, which is absolutely insane. So what are the current projections for commercial production and testing of their larger batteries? Well, Quantumscape currently expects to produce their cells for their batteries and test them in cars in 2023, and if those tests go very well, they could start commercial production of their cells and batteries in 2024, as long as everything goes to plan. So this is a very speculative investment right now for the future growth of this overall company. However, if you are investing now, you need to at least wait around 3 to 5 years just to see if this company has any potential to it, because again, this is high risk, high reward. This company could actually be a dud and not end up following through on their promises. However, if they do follow through on their promises, this company could absolutely be huge. So with that being said, always remember to do your own research and make sure these companies are aligned with your risk tolerance. Subscribe if you're new, smash that like button if you haven't already for more videos like this one, and I will see you in the next YT video.